All right, joining me is Matthew Sigel, head of digital assets research at VanEck, who currently offers 4 crypto-related ETFs, including a brand new one that just launched yesterday. That's the VanEck Onchain Economy ETF. The ticker symbol is NODE, N-O-D-E. That's a fantastic ticker symbol. And I should note that Matthew is the portfolio manager on that ETF. And then VanEck also has filings with the SEC for an additional 3 spot crypto ETFs. And I'll just tell you, in my opinion, few people cover the crypto space overall better than Matthew. He's one of my favorite resources out there on the TradFi side. So Matthew, thank you for joining me.
Thanks, Nate. Good to be with you again.
By the way, do you consider yourself TradFi or DeFi, or are you both? I said TradFi side, but you really straddle both.
I'd say native TradFi. Got my start in equities and in sales and research on the sell side. So a crypto convert since 2017, but I won't show you my gray hairs under the hat. Hard to be native crypto at this age.
All right, so look, a lot that I want to get to, but I think we have to start with VanEck's newest ETF, which again, you are the portfolio manager on, so congratulations on that. This is the VanEck Onchain Economy ETF. And I guess first, give us the backstory behind this launch. What was the catalyst to pursue this?
Sure. So I've spoken to so many investors on the institutional side, advisors specifically, who theoretically want exposure to crypto, and they like it in equities, but they're just spooked by these portfolios full of the pure play miners and exchanges that have seen repeated blowups and bankruptcies over the cycle. So the issue that we're trying to solve with this fund is managing some of that downside volatility without losing exposure to the underlying growth drivers. And just to put some numbers around it, many of these pure play crypto stocks are trading at 2 times or even 3 times the volatility of Bitcoin itself. And that's because of a combination of factors, but leverage, small market cap, idiosyncratic business models. And so if you simply just add Bitcoin to these stocks, the historical data shows improved returns and lower volatility. So we're able to hold a core position in regulated crypto ETFs in this product up to a 25% weight. And then we'll focus the rest of the portfolio on compounding and cash flow. So complementing those kind of high beta pure plays like the miners, exchanges, some of the Bitcoin treasury companies we can talk about, we're going to introduce lower volatility sectors like e-commerce, fintech, energy, infrastructure, utilities. But crucially, every one of these stocks is selected based on some type of measurable involvement in the on-chain economy, whether they're currently making money from it, providing infrastructure, selling services, indicating future desire to address the market. When we scour the SEC filings and conference calls, the number of companies in these peripheral industries that are mentioning Bitcoin, blockchain, crypto is really growing fast. So we're up to 130 plus names in the investment universe. And particularly some of those latter sectors like the energy, infrastructure, utilities, they are starting to benefit from some of the same tailwinds that support Bitcoin adoption. We've got some new pro-growth policy in the US, more abundant energy, a bit of a rethinking of that connection between energy, power, and money. And so when you combine these exposures, we think that can offer an appealing balance of offense and defense. I mentioned the 130 plus names in the investment universe. They span all 11 GICS sectors. So really it's the entire equity universe that is in some way engaging with the on-chain economy, and that's a really interesting opportunity set. So sorry for the long answer, but it's really for investors who see the opportunity but have a hard time maintaining conviction through the cycle given the volatility.
So very crudely, it's more of a low vol or min vol approach to crypto equity investing. I mean, is that fair just at a high level?
Yeah, it is. It is. So just like pure play crypto equities trade at a vol of close to 100. Bitcoin's at like 40. S&P is maybe 15. So I don't, we can't get down to S&P levels, but I think that we can get down to Bitcoin levels maybe, and that is a lot more attractive to allocators than twice those levels.
And talk more about the specific companies that this ETF holds. So I was looking this morning and I saw top holdings include stocks like Coinbase, Mercado Libre, Robinhood. And as you mentioned, this ETF holds way more than crypto exchanges. But just take us through the holdings in more detail.
Yeah, sure. I think you can expect this strategy to hold a core position in a regulated Bitcoin ETF, and that might be 8 to 15%, something like that, depending on the environment. We launched with a small handful of 3 to 4% positions that we think can uh, maintain strong market share and compound over time. And then we have a whole bunch of 1 to 2% positions trying to provide this diversification and touch a lot of the emerging stories where if you look at some of the pure play ETFs, these companies are just have higher weights. So we're exposed, but as you observe, we're trying to introduce this ballast of these lower volatility names that do have exposure. And the really interesting thing about ballast, if you're in stormy seas, you can dump it and increase risk. And so we want to have that dry powder in order to buy the inevitable washouts that occur in this space.
And you alluded to this earlier, but talk more about some of these energy or midstream or utilities companies in here, because I don't think those are front of mind for somebody thinking about investing in sort of the digital assets economy.
Yeah, what we're noticing from reading the conference call transcripts of some of these utilities and also talking to the miners who were buying electricity from them is that a number have really embraced Bitcoin mining and are starting to call it out in their conference calls as a driver of returns. So we are fortunate here at VanEck that we run a number of natural resources and energy infrastructure strategies. So there are investment professionals here that I can lean on, collaborate with, and find where the intersection of interesting stock with Bitcoin exposure can intersect. A lot of that is regional. So, Texas has obviously been at the forefront of this kind of pro-growth approach to electricity and energy infrastructure. A lot of Bitcoin miners have located or relocated there, and the utilities that are serving that market, like a Vistra, VST, it's unregulated. They're growing. They're actively servicing this market, and we think they're going to be able to earn attractive returns. Even at the Monday this week, one of the largest utilities, NRG, announced an acquisition. You don't usually see a 30 billion utility company up 25% in one day. But that's what's happened because I think investors are so used to this sector being slow growth, low vol, that now when they're seeing growth return, the stocks are responding disproportionately. So that's another name that's in there at a decent weight. And you can read their filings. They call out crypto, Bitcoin, blockchain as drivers. Many of these names.
You mentioned the ability of Node to hold spot crypto ETF. So actually, right now, the largest holding is the VanEck Bitcoin ETF HODL. Again, another great ticker symbol, one of my favorites out there. And I think you were mentioning this ETF can hold up to 25% of its assets in spot crypto ETF. So for now in the US, that's just spot Bitcoin and spot Ether ETF. So is it just those two or is it global crypto
It's global
ETFs?
crypto ETFs. So VanEck, as you noted, has 4 in the US. We've got more than a dozen in Europe. So one of the inaugural holdings in this fund is a position in the VanEck Solana ETP, listed in Europe actually stakes its Solana, so that will earn some native yield. I'd expect that when and if spot Solana ETPs are listed in the US, we'll probably come back here. The fees are lower, more liquidity, but it is nice that the strategy has that flexibility to buy crypto ETPs wherever they may be.
And by the way, going back to one of the holdings I mentioned in Node, Coinbase, I'm just curious. I just have to ask you, what did you make of it being selected to join the S&P 500? That was big news.
It's huge news. This is how you get these kind of passive flows, and a company, an asset manager like Vanguard, which has famously blocked Bitcoin ETFs from their platform. Well, they've got the biggest S&P index fund, and they're going to be buying MicroStrategy. So I'm sorry, Coinbase, MicroStrategy already being in the QQQs. So I think the numbers that we've seen, there could be 10 to 15 billion dollars of passive flows. Stock was up sharply. They've been able to hold on to market share during arguably a more competitive environment with Robinhood and then some of these other IPOs that have come to market. But that is one of those kind of larger weightings in our fund, at least as it's currently situated. And yeah, I think the S&P is a nice development.
Yeah, to your point, if you look, and I know you know all these stats, the top three ETFs by assets across the entire industry, so we're talking 4,200 ETFs, are all S&P 500 ETFs. And then if you actually go down the league tables a little bit, and you look, say, at the top 25 or top 30, you have two other S&P 500 related ETFs. There's an equal weight one from Invesco, and then there's another SPLG from Spider. It's like the miniature version of SPY. So it's just interesting. You're talking about five enormous ETFs, and all of those investors will now have exposure to crypto. So I think you have to love that. Another question I had for you, Matthew, is I know VanEck already offered the digital transformation ETF, ticker DAP, DAPP. Do you want to explain how Node is different from that ETF? Because if you have investors looking at your lineup and say trying to decide between those two, and you would say you want them to invest in both, I'm sure, but if they had to decide between those two, what should that thought process look like?
Sure. So DAP has an inclusion criteria which requires that a company get the majority of their revenues from Bitcoin, crypto, digital assets, or where we can expect that over a reasonable time period it will reach 50% plus. So that universe at the moment is just highly constrained. There's 20 names in that fund. There's roughly $200 billion of total market cap in that pure play universe. And because of the concentration, the fund has very large weights in MicroStrategy, Coinbase, and Bitcoin miners. Specifically, Bitcoin miners really punch high in that strategy. So the long-term performance has been extremely volatile. And I think that for investors who are looking to who have a tactical view and want to catch the explosive part of the bull market, if they think they can catch it, DAP is a really great way to get that pure play, high volatility exposure. But in the inevitable downturns, there are, in my opinion, some issues with just the weighting of Bitcoin mining. It's a very tough industry. Your revenues go down by 50% every 4 years, highly capital intensive, and over the cycle, they haven't been great performers. So we're going to, our initial weights in Node are just much, much lower for that Bitcoin mining ecosystem. And then the investment universe, because it can include any company with a credible strategy to make money or save money from digital assets. Instead of 200 billion in market cap, we've got a hunting ground of 8 trillion. So it can be potential to be much more stable. The back testing shows much better performance, and I'm trying to get clients who want this thematic exposure but who also want the option to maybe change their mind in a bear market. And I'm hoping we can avoid that, 80 to 90% drawdowns that have been typical among the Bitcoin miners specifically.
And sort of on the same note, and maybe you'll have a very similar answer here, as I know you're well aware, there are a fairly large number of crypto equity ETFs on the market right now. And I think you've done an excellent job just explaining or outlining how you're positioning Node. But I'm just curious how you stand out in this crowd. Like, will it all come down to risk adjusted performance? Do you just need to get the word out in terms of the differentiation here with the volatility profile? Because I'll tell you, and again, you know this, I feel like there's a lot of investor confusion in this space just around the differences between all of these crypto equity ETFs. There are just so many variations of these types of strategies out there. So how do you stand out?
Uh, so I got a reply to a tweet yesterday. Someone like watched some video on social media and was like, that's why the guy's reply was, that's why there's so few Stanley Druckenmillers. This guy, Siegel, has the right idea, but he's not expressing it in position sizes. So the way we're standing out, I think, is through this lower volatility, hold some spare powder in reserve approach. At launch, roughly 25% of the portfolio was in these energy and utilities names. They do have, in my view, crypto and blockchain exposure, but you won't see them. I don't think you'll see them in any of the competitor funds. And so that is a novel wrinkle. And I think the way that we'll differentiate is if we can deploy some of that into the higher beta stuff during one of these washouts and catch the upside as well.
Okay, before we move on, because I do want to talk more broadly just about crypto ETFs and crypto overall, do you see an ETF like Node replacing, say, direct spot Bitcoin ETF exposure in a diversified portfolio since it can own up to 25% in Bitcoin or just crypto overall? Or is Node a complement to that exposure? Like, I'm just trying to think from the perspective of an investor or an advisor who's building a portfolio. How should they think about Node in the context of that?
I think it's a satellite exposure. I still talk to advisors who don't want to put Bitcoin or Bitcoin ETFs into their portfolios. Whatever reason it is, they want the diversification. They're used to equities. It just different strokes for different folks. I think that, to my point about this like Druckenmiller comment, there may be retail investors who want more juice in their portfolio. They want to make these tactical decisions themselves. I get that, but there may be even a reason to own both. Diversification is never a bad thing. But where I'm targeting, potentially bigger tickets is some of these advisors who have indicated that this is a strategy that resonates with them.
So essentially, maybe it's a way for them to baby step into crypto. I know that's not how you're approaching managing the strategy, right? We're going for a lower volatility profile overall, but maybe it will appeal to that crowd who has been reluctant to have crypto exposure.
That's right.
Okay. In terms of overall digital asset ETF development at VanEck, again, I noted at the top, you currently offer those 4 crypto related ETFs here in the US. So we've obviously covered Node and DApp. And then you offer HODL, which we talked about, and then the VanEck Ethereum ETF, ticker ETHV. And then if I look at current SEC filings, which I don't know how much you can directly speak to those, but I show you have a Solana ETF filing, an Avalanche ETF filing, and a BNB ETF filing, the Binance token. And so how are you in the team thinking about building out the digital asset ETF suite overall here in the US?
Yeah, we've been, I'd say, more selective than some of our peers in terms of rolling out the single token ETFs. the performance of some of our active strategies has been better than our passive strategies in this asset class. So we've made the choice to try to focus more on those active strategies like Node, like our digital assets alpha, the hedge fund for institutional investors. And on the single token side, we're just trying to be really picky and judicious and find special situations. So that's where I would put those three that you mentioned into. The holy grail for the crypto ETF sector is a multi-token basket, something like the Coinbase 50, where VanEck's Market Vectors subsidiary is the index provider for that Coinbase 50 index, and I think that would be a strategy that would attract a lot of attention, being diversified, but the operational constraints are still make that product impossible. So you'll see that the filers who are coming to market with the multi-token baskets, the ex-Bitcoin part of the funds are still less than 10%. There's no agreed upon mechanism yet for the in-kind creation and redemption of the ETFs, how to custody the non-Bitcoin coins. So we're waiting on some regulatory clarity there, and then I think you'll see a mad rush into these multi-token baskets.
Outside of ETFs, did I see correctly that VanEck recently launched a tokenized fund?
That's right. So VBIL is our tokenized money market fund, not too dissimilar from the BlackRock BIDL product that's got some attention here, but we had kind of reverse inquiry client demand from exchanges and market makers who want to diversify and away from the existing tokenized money market funds. Should be a growing industry. The use case that this fund unlocks is the ability to swap between stablecoins like our own Agora AUSD stablecoin that we're backing, or USDC, swap between that and the interest-bearing T-bill fund on the weekend in one click via smart contract. So that weekend unlock should be interesting to institutional clients who are moving money around on weekends and want to capture a few extra basis points of interest.
You were mentioning the regulatory environment a bit just a moment ago, and I've asked this, I think, of pretty much every guest on this podcast recently, but I'm just curious to hear from you how the clearly shifting regulatory environment has colored your views on product development overall, whether we're talking about ETFs or we're talking about tokenized funds, versus maybe how you thought about all of this, let's say, a year ago.
The day after the election, it was Wednesday. We have our crypto huddles on Wednesday. Whole team, Jan VanEck chairs the meeting, and the first thing he said the day after the election was, "Product development team, get back to work." So we definitely had hit the pause button during the second half of the Biden administration, and you saw some updated prospectuses from us post-election, those new filings that you talked about. But I think rather than saying, oh, okay, now we have 10 new products that we want to launch, we're trying to be focused, double down on the things that are working, like some of our private strategies. We have that fee cut on HODL where it's essentially free until next year. So it's as much about having more conviction in what you already have as it is bringing a bunch of new products to market.
And is there anything in particular that you would like to see from regulators? Or we can talk about, I know there's a stablecoin bill that's being, I would say, debated right now. I mean, anything front of mind for you from a regulatory perspective that might help boost the space overall?
Yeah, the IRS needs to chime in here on the tax treatment of staking and how managing the staking exposure in an ETF will work, because under many reasonable people's analysis of the current rules, if you're tinkering around with the percentage of, say, ETH or SOL that's staked in your ETN, that could turn it into an actively managed product blow up the grantor trust status, cause a whole bunch of unintended tax headaches. So it's around, and disturbingly, the IRS is not part of the crypto task force, even though they are under Treasury. So I think that's really the missing piece in terms of the SEC turning on in-kind creation redemption of the existing ETFs and allowing staking to be added to some of the newer products.
Is there any catalyst to press them to offer that clarity? Because they're not really under any sort of time frame, as I understand it.
Not that I'm aware of. I think many people are kind of taking new SEC chair, President Trump, David Sachs, Scott Bessent at their word that they're going to figure this out.
Fair enough. It sounds like maybe there needs to be a little bit of friendly political pressure applied to get the IRS moving. Okay, with our remaining time, let's talk about the current state of the crypto markets. And if I look year to date, and again, Matthew, you know all these numbers, I show Bitcoin is up about 10%. Ether is down nearly 25%, but performance has been much better since early April. And you can certainly talk about any other digital assets if you like, but I'm just curious, what are you hearing from clients right now? Like, what's the general sentiment around crypto?
On the advisor side, it's still a 0 to 1 moment for Bitcoin ETFs. I did a call with several hundred advisors recently, and we had a poll. Are you allocated to Bitcoin ETFs for clients? 48% were still no. So that is, I know it's amazing to hear from the crypto audience will be like, how can this be? But there's still a lot of people stuck on 0, and that is just becoming an easier conversion. More inbounds, the news flow, very supportive. I think one interesting dynamic in the markets is last year, Bitcoin was driven by ETF flows, fund flows. Those were the largest kind of year-over-year increase in Bitcoin held. This year, it's a little different. It's corporates, listed corporates. So MicroStrategy being the biggest example, but there's an explosion of listed companies that are adding Bitcoin to their balance sheet, not only a 1 or 2% weight, but going all in with this leveraged treasury strategy. And corporates have become the biggest year-over-year buyers of Bitcoin. So that's been a wake up. The equity, and this is why I'm pretty excited about Node, is because there's the equity markets are wide open right now for crypto-related strategies. Some number of these strategies involve just raising capital and buying Bitcoin. There's far fewer of those for other tokens. So there's something like 100 listed names that own Bitcoin. There's like 3 in Solana. There's maybe 1 or 2 in Ethereum. So the story for Bitcoin still kind of head and shoulders above the others in terms of predictability, volatility. You noted ETH's disappointing performance. It's had a great month. It's up 60% in the last month. Ethereum made some changes in their leadership at the Ethereum Foundation and have acknowledged some of their shortcomings and produced a roadmap for fixing them. A lot of folks think the roadmap is, will take too long, but the rebound, some of it's mean reversion and some of it is an appreciation for, I think, some of the feedback that Ethereum leadership has received and reacted to.
So you mentioned advisors getting off 0. You talked about corporate buying of crypto assets, and then obviously Ethereum. I mean, any other potential positive catalysts you see moving forward? And I know there's a lot here. We could spend 5 hours talking about potential catalysts, but anything in particular standing out to you just at a high level as a potential positive price catalyst for Bitcoin, Ether, or crypto overall?
Yeah, the sovereign adoption, I think, is still underplayed in the West. Americans don't really have use for Bitcoin. Our money tends to outperform. We trust our institutions. Inflation is low, but for the billion people living in countries with 10% plus inflation, they think differently. And in the last couple months, the news flow around sovereign adoption of Bitcoin has also picked up. Russia and China now settling a portion of their energy trade in Bitcoin. They're not the only ones. 8 countries now mining Bitcoin with using government resources. This morning, there was news that Ukraine is close to finalizing a Bitcoin strategic reserve bill, which is an interesting one. Ukraine was ranked #1 on the crypto adoption index in the year 2020. And after the war, they can no longer be neutral, obviously. So crypto adoption fell, capital controls, as they hopefully peace develops in Ukraine and they become a neutral country. There's no currency more neutral than Bitcoin. And I think that's driving this news flow. And you're going to see more of that over the next number of years.
So interesting. Every time we chat, it just reminds me of how early we are overall in crypto adoption. But Matthew, I always enjoy connecting. Congratulations on the launch of a node. I certainly wish you the best of luck on that. And thank you for joining me.
Thanks, Nate.
That was Matthew Sigel, head of digital assets research at VanEck. Thank you for listening or watching Crypto Prime this week. As always, you can stay up to date with all of my latest guests by visiting CryptoPrimePodcast.com. See you again next week.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of the investment advisory firm The ETF Store. While OTR Media LLC and the ETF Store are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by the ETF Store. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the potential loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.